Hey guys, thanks for clicking on this video. Today we're going to be talking about Cisco Systems Inc. I'm going to be giving you my fair value based on discounted free cash flow and the Buffett-Graham intrinsic values. We're going to be going through the fundamentals of the stock, talking about how this company makes its money, and then in the back end of the video, we're going to be looking at technical analysis. Before we get into that, what is Cisco? Well, Cisco is a company which develops, manufactures, and sells network hardware, software, telecommunications equipment, and other high-end technology services or products. So Cisco's stock price is currently $61 a share, down from its previous high of $64, and at the start of the year it was around about $44 a share, which means that it has gone up around 35% on the year, which means it is beating the S&P 500, which is not something you'd see from one of these formerly slow growing companies, but it just shows how the stock was massively undervalued. Interesting thing about Cisco here, if we go to its all-time chart, this is going from 1991 to 2021, you can see that the stock price still has not recovered from the dot-com bubble boom when it was at $80 a share, which is one of the things you want to see where people are talking about bubbles and the problems of stock prices being overvalued. If you were an investor at Cisco at $80 a share and put all your money in there and held it until now, you would still not make money. But if you invested in Cisco consistently throughout that entire time, you would have made money hand over fist because of this steady growth since the 2000s. But less about the dot-com bubble and more about what's happening with Cisco now. Currently, Cisco has a market cap of $258 billion. It pays a very healthy 2.41% dividend yield. It has a PE ratio of 22.87, which is lower than the stock market average right now, which is at 26.5, so that's a pass, and the earnings per share currently are $2.70. You can see that Cisco over the last year, since Q2 of 2021, has consistently beat earnings, which is another reason why investors are liking this stock. Let's head into the income statement. But before we do that, guys, can you please give a like on the video? Really helps me out, and let's just go straight into it. So first, we're going to be looking at the revenue of the stock. Cisco's revenue comes from four main areas. It's infrastructure platforms, applications, security, and services. 54% in application platforms, 11% in applications, 7% in security, and 28% comes from services. Revenue has been relatively flat, gone from 49 billion in 2015 to 50.97 in the trailing 12 months. So that is a pass, but it is quite a slow growth. Next, what we're going to be doing is looking at the net income. Net income is a much better story, gone from 9 billion to 11.4. So you can see that Cisco has managed to get more profit out of that revenue despite revenue staying flat. One thing that Cisco are really good at here is buying back their shares. Their shares outstanding has decreased pretty drastically over the last few years, gone from 5.1 billion to 4.22 billion. And the reason for that is if you had one share of a company and there are 10 shares outstanding, you would own 10%. Then if the company bought back 5 of the shares, so there was now only 5 shares, you would now own 20% of that company with one share. So it means a couple of things. It means Cisco are rewarding investors because they're getting more cash flow per share, and also that Cisco thinks their share price is undervalued because they are buying it back rather than doing other things with their capital. Last thing we want to look at is the free cash flow increasing, and the free cash flow has gone from 11 billion to 14.14, so that is a pass there. Steadily increased since 2015. Next, we want to look at the total cash dividends paid. With that 2.7% dividend, they are giving away about 2.6 billion in dividend payments, but with a free cash flow of 14.14, this dividend is very safe. Now we're going to look at our discounted free cash flow models. We've calculated the future free cash flows of Cisco, and this is going to give us a calculated stock price based on these values. You can see that the free cash flow ratio is around about 18.3 and an average free cash flow ratio of 17.7. So based on the estimates of revenue, this gives a calculated stock price of 100.26, which means it's at a 63% discount, a massive discount. If we just quickly go to the Buffett-Graham intrinsic value, this is using earnings per share and expected growth rate. The expected growth rate of Cisco is pretty low, it's 6.53%, and that is why they are actually giving it a fair value of 58.00. So it's just saying it is slightly overvalued at the minute, pretty much where it should be. But if we look at discounted free cash flow, that is a much better story, because with the free cash flow that Cisco generates, and it has been increasing, this looks like it is a buy. Analysts are seemingly agreeing with the stock being undervalued at the minute, but they only have it at a moderate buy, 10 buying, 7 holding, and 0 selling, $65.69 with a 7% upside over the next 12 months. On the high side, it is around 73, and on the lower side, it's 57. So analysts are bullish on the stock, but not as bullish as it is on the discounted free cash flow. Now we are going to look at some technical analysis. Firstly, we're going to be looking at the moving averages. I like to look at the 50, 100, and 200 day, and we have a 50 day here in green, a 100 day in yellow, and the 200 day in red. So what are we seeing right now that is bullish? Well, the price is above all three of the major moving averages, which is a massive buy signal. You can see it broke through here in December 3rd, which would have been your buy signal there, and you would have bought and held the entire way. Another bullish signal we can see is that the shortest day moving average, the 50, has crossed over the 100 day, which is once again a massive buy signal. And finally, if the stock price has, well, you can see here that the last time the stock hit the 200 day, it had a massive rebound. So if the stock price was to go to $55.63 in the short term, which is about the 200 day moving average, that would be a massive buy signal. But you can see here the stock price has pretty much been above the 50 day moving average. When it has dropped below that, it's only really hit the 100 day and then shot up again. And then when it did drop up, we got a massive movement to the upside. Next thing we are looking at is the MACD, which is the moving average convergence divergence. And once again, it is a pretty bullish story, but there is some slight negatives here. What we want to see is the MACD and the signal line crossing, which it did up in December, but you can see it's crossed again here. The momentum has slowed on the 4th of January, so that is a bearish signal. And you can see also here that it has gone red, which is basically just showing that. But one of the positive signs is the MACD is still above the signal line. So actually, sorry, the MACD is saying that there are bearish signals at the minute. But if you look at what the stock has done over the last year, it has basically been crossing it pretty consistently. When it's dropped down, it's stayed relatively flat and then shot up, stayed relatively flat, shot up, and then stayed relatively flat. Went from, this was about $57 to, when the action flipped, it was about 54. So if you can hold out here and then wait for the next flip, that would be your buy signal as per MACD. And finally, we're looking at the RSI, which is the relative strength index. This tells you if the stock is in overbought or oversold regions. And as you can see, the stock was in overbought regions and is now coming back down about the average. One of the things here on the daily charts, which I'm seeing, is if the stock gets to oversold regions, there would be a massive buy signal. It hasn't happened too often, but you can see the stock has shot up since then. And if we go to the weeklies here, you can see that the stock is currently still trending towards overbought, but just a bit on the overside, currently at 63 and 59, with 50 being the middle. On the weeklies, if you see the stock ever gets to oversold regions, they are your massive buy signals here. Cisco has only been in sort of oversold regions twice, and both those times has shot up dramatically. Right guys, thanks for watching the video. Please give me your thoughts on the updated format. Hopefully you enjoy it and it gives you more information, and I'll catch you guys next time.